Hello everyone, thanks for joining us. My name is Emmanuel Rachel and this article will discuss the topic Tax Reforms versus Your Paycheck, What's Changing and Why It Matters. On 26 June 2025, the President signed the Nigerian Tax Act, which is the NTA, into law with an effective date of 1st January 2026. This act introduces sweeping reforms to personal and corporate income taxes with significant implications for employment income, payroll compliance, and employer-employee relations. Now, what are the key changes affecting employment income? 1. Revised tax bands. The NTA maintains a progressive tax system but introduces a 0% tax rate for the first 800,000 naira of annual income. The great news is everyone in every income group will benefit from this threshold. Secondly, the Consolidated Relief Allowance, which is the CRA, has been replaced with the Rent Relief Allowance, which is the RRA. Now, this RRA is computed at 20% of your annual income and is capped at a maximum of 500,000. So essentially, this means that to enjoy the full 500,000 naira relief of the RRA, you have to incur rent expenses of at least 2.5 million. And also, you need to provide valid supporting documents which will be prescribed by the State Internal Revenue Service. Expect documents like your valid rent documentation, which could include your rent receipts and your tenancy agreements. And there's an unclear application of the RRA for homeowners, rent-free residents, and sharers. The state revenue authorities now have more power under the NTA. This is because the state IRSs can define their own rules for granting reliefs and require written claims using prescribed formats. This will create variability across states, increasing the burdens on employers with staff in multiple locations. Now, what is the impact of the NTA on your take-home pay as an employee? For low-income earners, we expect that they will benefit the most from the 800,000 naira tax-free threshold. Middle-income earners may gain or lose depending on rent and documentation. High-income earners could see a slight drop in net pay due to the loss of CRA and increased effective tax rates. As an employer, what should be your next step? First, educate your employees. Explain the reforms and the potential impact on salaries to reduce anxiety and improve transparency with your employees. Next, prepare for the new compliance requirements. Expect increased documentation for your employees to qualify for reliefs. You might be required to collect and verify employee rent documents, and you also need to track state-by-state changes in the RRA rules and deduction criteria. Lastly, update your payroll systems. Reflect new tax bands, remove the CRA, and introduce the RRA. Also ensure accurate tax computations to avoid penalties. In conclusion, while the NTA aims to modernize Nigeria's tax regime and provide relief for low and middle income earners, it brings added complexities for employers, particularly around documentation, system updates, and multi-state compliance. So, early preparation, internal adjustments, and clear communication with employees will be crucial to remain compliant and retain staff trust. To read more on our article, visit our website and subscribe using the button below.